Hello fellow traders. Today we're going to be a little creative. We're going to get into tackling emerging market analysis by using a tool you might not expect, the S&P 500. Think of it as a global market weather vane. By understanding what's happening in the US market, we can gain valuable clues about the risk appetite and economic trends affecting emerging markets. Today we'll get into how to analyze emerging markets like a stock pro by a pajama trader. Give this a like and subscribe. Let's get into it. The big picture, reading the tea leaves. Here is the sector, which you could probably find on sectorspider.com. And every day it gives an update as far as what sectors are performing, which ones aren't performing. In this picture, you'll see consumer staples was the leader. You see energy is also coming up, followed by utilities, real estate, and materials, where all others are sort of underwater. Movements in the S&P reflect global trends rather than just a U.S. company performance. Investors' risk appetite and expectations for economic growth drive sector performance. These factors influence emerging market investments. We need to understand the movements in the S&P aren't just about U.S. companies. They reflect a broader look on global trends and markets. Investors' risk appetite and their expectations for economic growth drive sector performance. These, in turn, influence how they invest in emerging markets. We're not just looking for a perfect match, but for clues. Risk off or risk on. The defensive play. When defensive sectors like consumer staples and utilities are up, it indicates investors are cautious. This suggests emerging markets might face turbulence. It prompts a need to reassess portfolios and risk management, or manage risk. Let's look at the leaders. Consumer staples and utilities are up. But what does it tell us? Investors are feeling a bit nervous. They're parking their money in sectors that offer stability regardless of economic climate. I'd say it's time to be cautious. Emerging markets could face some turbulence. Now it's the time to reassess your portfolio and manage your risk. And remember, your long-term goals. Where's the growth? Checking the pulse of key sectors. Declines in sectors like technology and consumer discretionary suggest concerns about global growth. Investors should focus on emerging markets with strong domestic demand. These markets should be less reliant on global trade. Now let's face the music. Technology and consumer discretionary are down. This isn't a great sign for global growth. It suggests investors are worried about future spending and innovation. I'd recommend focusing on emerging markets that have strong domestic demand and less reliant on global trade. Look for companies that are innovating and catering to local needs. There are still opportunities, but you need to be selective. Sector spotlight. Tailoring your emerging market strategy. The energy sector's slight increase suggests opportunities in emerging markets that are major exporters. Materials could offer potential, but financials' decline warrants caution. Carefully scrutinize the health of banking systems and emerging markets before investing. Okay, the energy sector is up slightly. If you're interested in energy, consider emerging markets that are major exporters. But remember to do your homework. And it's just one indicator among many. Same goes for materials. Financials are down. If it's your area of interest, carefully scrutinize the health of banking systems in those markets before you invest. Your game plan. Stay informed, stay disciplined. Stay informed about global trends. Understand your risk tolerance. Diversify your portfolio, remain disciplined, and focus on long-term investment goals. All right, you've got the tools. Remember, using the S&P 500 as a guide is just one piece of the puzzle. Do your research, Understand your risk tolerance and diversify your portfolio. Stay disciplined. Emerging markets can be volatile, so it's important to stay focused on your long-term investment goals. Now go out there and invest like a pro. Thanks again for watching.